Good morning and welcome to Signal Centre's Talking Bull. It's Steve and Jamie, your co-host today, and it's Fragile Friday. That's the way we see it. It's June the 10th, 2022, and welcome to the last trading day of the week. How you doing, Jamie?
Yeah, all good. All good. Thanks, Steve. We saw some pretty chunky moves yesterday in some of the equities in particular, so I'm looking forward to diving into some of those and seeing where we're at.
Yeah, it's pretty much. We'll run through the news headlines first and really talk about those. Let me bring up my notes on the news headlines so I'm not just waffling on about things that I might not know about. The ECB committed to a July rate hike yesterday. In the press conference, they left rates unchanged as expected at 0%, in line with expectations. Also confirmed that the bond buying under the APP program would end. There was specific guidance for July, with the council planning to increase rates by 25 basis points, 0.25%. It also plans to increase rates again in September, with the size of the increase depending on the updated inflation outlook. Obviously, inflation is the key. Central banks around the world really concerned about this and trying to fight it by using interest rates. Lagarde stated that inflation pressures have broadened while wage growth has started to pick up. The bank will make sure that the inflation gets back on target over the medium term. She added that it was a good practice to start with incremental rate increases, but some members wanted a commitment to a 50 basis point hike in July. So some members wanted to go a little bit more aggressive on the rate hike side of things. That had a big impact, as we'll talk about in the on the technicals as well when we dive into things like the Germany 40, the DAX 40. Peripheral debt concerns increased following the statement. There was a fresh increase in euro money market yields, with prices increasing a total of 150 basis points of tightening by the end of 2022. So 1.5% by the end of 2022. That's quite aggressive indeed. German bond yields moved higher, which supported the euro, and after an immediate slide on the decision, the euro posted strong gains to highs above 107.70, so fighting back against the dollar. There was, however, a sharp increase in peripheral yields, and markets were uneasy over the risk of fragmentation in the euro, which would risk a renewed debt crisis. That's maybe why we moved out of there. Don't know. Risk appetite dips again after the ECB policy meeting, with reservations over the risk of wider stresses as financial conditions continue to tighten. There are also concerns over underlying inflation pressures as oil prices held at elevated levels. The US and S&P 500 declined 2.4%, which was important in undermining wider risk appetite. US inflation data is also in focus. The latest US consumer price data will be released today. Consensus forecasts are for a 0.7 increase in prices, with year-on-year increase holding at 8.3%. The underlying annual rate is expected to slow to 5.9 from 6.2. The data will be important for global risk conditions, with renewed fears. If the data is higher than expected, lower than expected would provide at least initial relief to risk appetite. The way I read that sounded awful. Japan stays silent on intervention threat. In comments on Friday, Japanese Finance Minister Suzuki continued to warn over the need for currency stability, but declined to comment on the potential for intervention. We saw no intervention last week. Comments from Japanese officials will be monitored closely, and the wider G7 rhetoric on currencies will also be potentially important. So we are sort of moving into this sort of like world of really watching what everyone's doing. It's almost a race to the top, with people trying to keep their currencies stable while other countries are raising interest rates. Very difficult to sort of like manage that from a central bank's perspective. Right, so we'll dive into the charts now. I don't mind starting with mine. Let's take a look.
Yeah, go for it.
Yes, well, we start with Bitcoin. Bitcoin's had a bit of a flat week. We see this on a weekly chart again. Lots of indecision down here. It's almost, I don't know. I still am negative towards Bitcoin, but these candles of indecision don't fill me with a. I don't know. It is indecision time. You've got these candles look like bullish hammers. They get sold off, and they bounce back by the end of the week. Sold off, bounce back by the end of the week. Sold off, bounce back by the end of the week.
Sorry, can you zoom in on the candles a little bit, just so we can see the wicks? It's a little bit. There you go. That's a bit better. Brilliant. Thank you. Yeah.
Is that better?
Yeah, perfect.
Yeah. So these are like bullish hammers. I mean, they're great. When you see that at the bottom of a trend, and then the next candle is up, then that's potentially a nice recovery. But it hasn't been happening. And then you get these inverted hammers. Now they work in a similar sort of way. They show that there's buying interest, but then the buying interest dissipates by the end of the week. But it's still a sign that the bulls are interested at these levels. And you're seeing a similar sort of formation with this week's price action. We've still got a few days to go, obviously, from a crypto perspective, because it expires on the Sunday night. That's when the candle finishes. But again, at the moment, it looks like an indecisive candle, a doji candle, where it's opened and closed at the same price during the week, and it's had a decent old rally. Didn't get quite as high as the week before, and it's actually made a lower low. So overall, still remains negative. Needs to really get a break above the 32,300, and any break below the 29,000 level, and a close below there, specifically below the 28,008. Well, I suppose if we look back, a close below 29,400 would be pretty negative. That would be the lowest close since December 2020. So that's definitely something. We're not far away from that. It's like serious issues going on over there. So yeah, definitely should look out for that. Now, taking a look at commodities, weekly chart on gold. It's been a little bit. Let's try and dive into the daily chart a little bit. We've been sort of sideways pretty much, stuck in this range between 1875 and maybe 1827 for a good sort of 3, 4, maybe getting on to 4 weeks. Price action over the last few days has been slightly negative. Obviously, when interest rates are moving up across the board, across central banks, then there's less interest in investing in gold. That the interest rate return would be deemed at a point will deem to be better. So this will definitely have an impact. Obviously, where the dollar goes as well, that will have an impact on, specifically on the gold dollar, which we normally price gold in, or talk about gold in gold dollar. So overall, a slightly negative finish to the week, really. The weekly candle is negative. Let's take a look at short-term chart, 4-hour chart on gold. Yeah, it's sort of telling us, well, I mean, you've got a little bit of a trend line here. 1, 2, 3, 4, 5 points it's touched. So a break below that trend line, it could open up a little bit, move lower. I think the CPI is really key today. We could see sort of like this take a very volatile move. It seems to have sort of slowed down into today's data. So yeah, it will be very interesting watching that later on. WTI crude oil, looking at that, still on the front foot, managed to get up to 121.30 yesterday before peeling back the gains overnight. Again, this is all about buying dips. There's no other way of looking at oil at the moment. Yeah, and you sort of like you notice it when you go to the petrol pump and fill up your car. Although it doesn't seem to sort of make sense when oil was, more than this 10, 12 years ago. Prices at the pump were still a lot lower. So someone seems to be doing well out of it. Hey, government. Anyway, levels to watch here. On the downside, really, support, next sort of like buy level of support, maybe down, well, I suppose around these levels you could sort of like look to be sort of given reasons to buy. with the good risk reward strategy. We've definitely got this another nice trend building on a short-term basis. Potential trend line here, 1-2 points. Looking for a third, so maybe a dip down to the third, dip down to this low at 115.80 to reignite the bullish interest. Although there doesn't seem to be much needed to do that. So still looking good potentially for a retest of the high we've seen, the multi-year high at 126.44, obviously all-time high around about the $150 level. So looking out for that. Quickly move on to euro dollar. See this nice, well, let's look at the daily chart. See what's happened yesterday. Euro, big sort of move yesterday, big spike higher, then the sell-off, and really is testing the actual 21-day moving average. 21 days is quite a nice moving average because the month has just over 20 days in it, 20 working days in it. On average, it works out. So that's why we sort of like look at that. But yeah, broken below there. So it's since 19th of May. It's been above there since 19th of May. So close below there. Quite interesting. If we can hold this, because you can see this support level from the 1st of June, where it was a low of 106.27. We're trading around 106.29 at the moment. So if prices manage to stay below there, opens up a little bit of a move to the downside. This looks like a bit of a topping formation. Quite a nice top reaction rally. Obviously, the trend is a downtrend, so you get reaction rallies in between. This was quite nice, I suppose. This level here, 108.09, didn't really test it, stalled in front of it. Maybe we're going to sort of like look for that euro dollar move to continue. Obviously, that sort of signifies maybe that the US are going to be more aggressive with rate tightening than the Europeans. How did cable fare? A similar sort of story, not quite as negative. 124.30 is probably the level to watch in cable. That would be the support level. And above, we got the resistance of 126.67. So again, still in a downtrend, still on the back foot. It's got up. It's stalled at the previous resistance. Well, moved slightly above it, then moved lower. It's hanging on to that 21-day moving average at the moment, but still on the back foot compared to the dollar. So a little bit more hope for the dollar. And as we can see, a nice little candle here that I like to see, hanging man candle at the top of the range. I think it's also called there's another. It looks almost like a doji type candle, but can't remember. It's a gravestone or a long-legged doji. I think it's gravestone. It looks a bit ominous though. So again, it's if we get a negative day today, that for me will be an evening doji star formation. So look out for that. That would signify a little bit of dollar weakness, maybe. So. But at the moment, still in this really, really strong uptrend. Very difficult to argue against it. Shorter term chart. We may have to go shorter term charts to get some real insight into close levels to watch. So potential for a decent double top here. We've got the high here and here. Got the neckline here. So let's mark that out. That'll be significant. A break of 133.18. Could open up and move lower in a double top formation, quite reliable formations. Let me just like stretch that out, and it gives us a nice measured move as well. So you can sort of like look for a decent reward on that down to 131.86. Yeah, so look out for that one. Dive into a few indices before I pass over to Jamie on the stocks. We can see this really significant break lower yesterday, and this happened around about the close. We saw the Dow, Nasdaq, S&Ps, most equity indices capitulate and drive lower into the close, and we've seen since then we've seen really little net movement overnight. So that almost paints a picture of a bearish flag forming, ready for the next acceleration in this downward move. So it looks a little bit ominous. Same sort of formation in the Nasdaq. Support now at 12,256. You can see we had similar support back here, 12,227. So a break below there, and it'll open up some sort of vacuum. Sometimes it's good to sort of bring the volume into it, and you can see where this vacuum can occur. So this break down below here will really open it up, because you can see there wasn't much that traded in this breakout rally. So it's almost like it creates a vacuum, creates that void where there wasn't a lot of volume taking place, and normally you see that occur at the same levels. If we jump back to Dow, not quite as the same. So Nasdaq's the one for me to watch. That real big gap there. Nasdaq seems to have held up quite well this week. Nasdaq, let's get rid of this for a second. Sorry, DAX. This is the one Jamie's been trying desperately to be short of this week on the gun to head challenge, and it's sort of like it's let him down basically. It's waited until after 9 o'clock, or after maybe just getting a slightly stopped out and then catapulting lower. It's just taken all week to fulfill his target. So maybe we got to change that gun to head to like a gun to head weekly challenge, and really go for it. But you can see that for me, this is a pretty decent break lower. That was the real level to watch, 14,309, which was provided support on the 1st of June. And also, if we look back here, there was a sort of a real decent battle between bulls and bears, and it's sliced through there and has gone lower. It's moved into a lot of previous support resistance levels, so we should see it slow down slightly. But for me, looking to target maybe a move even down towards the 13,900 area. That's about it from me, Jamie.
Cool. I was going to say as well, on the DAX, there's quite a nice head and shoulders top. If you on the line just above yours, you can see
this one.
Yeah, I think this is obviously on a short. Sorry, no, actually, it's from that where the R is of the EUR.
Oh yeah,
see, that's kind of left shoulder, head, right shoulder. That ended up playing out quite nicely as well.
Yeah. And I mean, that the neckline would have been around about this level.
Yeah.
So that's a great sort of like, that would have been a great initial entry level. Getting short there, it retested that level a couple of times. So that 14,450, that'll be quite significant if we get back up there. If you manage to sort of hold on to your shorts there would be really no reason to get out yet. So it just continues that move lower, that grind lower. No real sign of any reversal anywhere here. So yeah, that was nice, really nice level. And then this level, breaking this level, you could be short around here, and you can actually move your stop down to around about these levels. So it's a bit of a free trade then.
Yeah, locking in some profit.
Yeah,
I think that could be that kind of move could be extended into today. Honestly, I think there could be more selling to come. As you said, on the Nasdaq especially, there looks like there could be a bit of a vacuum, potentially a flag forming. So we'll jump into some stocks and see how it looks on an individual basis. So here we go. I'll pull up my screen. Oh, that's my potential gun to head. We'll get to that later. We'll start off today with the biggest gainer and loser. The biggest gainer is this. This is, let me see, DBV Technologies, which was up 79% yesterday. DBV Technologies plans $194 million private placement as part of private investments, public equity financing from the sale of shares and pre-funded warrants. So yeah, that was quite a nice move. We actually had a little bit of a technical trade here. You can see it's a bit of a double bottom here. This is not the tool to use to draw them, but you can kind of see these two lows here. And then we did actually get quite a nice, these magnets always catch me out, quite a nice break above this kind of level. Obviously it gapped up and then it really shot through. So a really nice move yesterday for DBVT. On the flip side of that, we'll jump into our good friend of this week, Boxed, which is really, I mean, we've looked at this, I think 3 out of the 4 days, or maybe 4, I don't know, out of the 5 days, sorry. And when we first checked it out, we're now down 63% from that initial bringing up on the biggest gainers and losers. I think it was after this move, but now we've had 1, 2, 3. We just keep gapping down. We keep closing near the low of the day, with the volume still very much up. So Box is really struggling. Now down to just $2.51. From at the start of the week, it was up at $6.83. So a pretty rough time for Boxed. We looked at IMTE yesterday as well. I thought I'd jump back in to just give you an update on its progress. That's now down 75% in 2 days, which really does highlight kind of having a good stop loss in place for you guys trying to trade it, because these things can happen. They can happen very, very suddenly. You thought yesterday was the end of the bad move down. No, it's fallen another 27% yesterday. So pretty bad times. But today's loser is CISO, Cerberus Cyber Sentinel. Oh, that's a tongue twister, isn't it? Corporation. Down 42%. Hit this resistance quite nicely that we saw here, actually. That's quite a nice level. That area of resistance got tagged before. But yeah, down 42% yesterday. Shares fall sharply amid higher than average trading volume. Nothing really too crazy to look at there. But yeah, pretty rough time. And actually, it doesn't get much better if we go into a heat map, which we will. So this is the S&P 500 heat map. And you can see it's a sea of red across the board. Like I always say, the darker red represents a move greater than 3%, I believe. So 3% to the downside, I should say. So Apple, Amazon, I should say, maybe it's 2.5%. We're a bit unsure. We're discovering, but yeah, as you can see, it doesn't take a genius to work out that this was a bad day for the S&P, and that was mainly a result of the close. I think it was just the last 2 hours of trading or so. It just really tanked. But yeah, across the board, there was nothing really, no saving grace. You can see this guy down here, NXPI, was actually up 4%. Great job there. But generally pretty rough trading. Let's see how that looks on the individual stock basis. So I want to take a look at our good friend Novavax, which was down 17% yesterday. It gapped down and it traded right into this support which we had drawn out, and it's closed at that level. So to me, this isn't looking so hot at all. The volume's picking up again, which suggests people are really trying to get out of their positions. We look at this from a weekly perspective. If we get a weekly close below these wicks here, I'll just remove this support so you can see. So if we get a weekly close below these levels, kind of where we're at now, but any lower as well, it would be the highest weekly volume we've traded at in kind of since these levels back in January of last year. So to me, that would really signify a potential for another sell-off coming soon. This kind of whole last month or so, 2 months of trading is just a bit of a consolidation if we were to get that kind of move. And right now, I don't think it's looking so hot. Moderna, we'll take a look at. This is one we put an idea out for, trying to sell it into rallies, and so far it's looking pretty good. Again, we've got volume spiking up on this day yesterday. We've got this really bearish looking candle closing right at the bottom of today's range. Again, to me, that's something that I think we can at least expect to see a move down to the support level of about 125. But realistically, again, I think these weekly closes, a lot of them will be significant. We're a little bit off closing below that level, but you know, stranger things have happened. But if we were to get a close below 125, that certainly for me spells a more extended sell-off. What else should we take a look at? Peloton. Peloton says this is horrible, isn't it? If this closes at the level it's at right now, $11, we're going to be closing, but for the lowest level we've had ever on Peloton since its IPO back in 2019. But this is one of those ones, I mean, it wasn't that long ago we were trading. I mean, this is January 21, but even if we come to October of this year, we're down almost 90%. And to me, I don't know what you think, Steve, but this looks like it's got legs to potentially move a bit further lower as well.
Yeah, definitely not a lot of people riding the way down, I don't think.
There we go. I like that. No, I think hopefully, I'm sure there are people kind of trapped in this, and we always talk about it. If like there's a bit of a sell, it's like, oh, it's got to bounce now. You know, it's good value. You hear these things thrown around all the time, but from my limited experience, something can always go lower than you expect it to go. That was a conversation we actually had on Novavax. I think I've brought this up before. But when I was looking at it, when it was around kind of 150, even like these slightly higher levels, I was thinking of putting out an idea, and I was kind of around these levels. We've got a break of here. Where could we go? I thought like, wow, I can't 50%. It's all the way up here. We've been having a good time, but no, it's gone down now 70% from when I was looking at it. So that's kind of a lesson I've learned since I've been really studying these individual stocks a bit more in depth. Alibaba had a bit of a tough day yesterday. It was an inside day, I should say, but on quite high volumes. So perhaps people are trying to get out of their positions. I think we can at least expect to see a retest of this level. This was a speculative idea we did put out yesterday, buying into these dips around this previous resistance level. We're definitely in a longer term downtrend, but as we said, there are signs to suggest perhaps Alibaba is turning around. We'll see how that plays out. But I think if we just take a look at the right side of the screen for a second, you can really see the damage of yesterday. You can see it's all red. The only one that actually was up of stocks is Costco, but even that just tagged this previous support level, become resistance, and sold off that. So really it was across the board selling. Not too much more to say, honestly. What have we got? I think it's just a lot of saying. Look at Pfizer, another one we've had a look at for a while. We put this idea out for when we had this shooting star candle at this resistance level. It did come up and retag that, and then it sold off more extensively yesterday. So that one's looking quite good. In the idea of transparency, I will say we did put out a very speculative idea on Pilotson, trying to scalp this support level. I think we are actually just about still in that, but that will probably be stopped out, and I've certainly got a bearish perspective after yesterday's close. So just to be transparent there. But yeah, the last one to look at is Micron. We looked at this before when we were buying it off this support level. We had quite a nice trade that kind of netted us 3.5%. But we're back at this level again, and to me, again, Steve, this looks like it's got legs to move lower. You can see this level has been really important, this 66, as we've wicked off it almost every week for the past couple of months. But now it's looking like we're getting that close down here, admittedly on lower volume, but I think if we do close at this level, or even worse, slightly below this level, kind of towards 65, you can kind of take a bit of a, we've got kind of like a triple or quadruple top, so you can kind of take the range of it, and we'll extrapolate that out just to set us a bit of a target. Let's see if that comes into anything at all. Get rid of that a sec. Here we go. So that's the kind of potential level I'd be looking for MU to go if we do get a break. That's not what I was looking to do. So I think, and that's my bias for MU at this stage. We have had this this sell-off, and this could be just a period of consolidation. It does take us back into these previous swing highs here. I think that's probably a likely next stop if we do get closed down at this level. Earnings coming up as well.
That's a huge double top as well if you look at it over a longer period.
Yeah. 1, 2. Yeah. And if we take a target for that, let's have a quick look at that.
Target for that wouldn't look very good at all.
Yeah, it takes us into these levels here. I think, I mean, this is one of those ones, again, where you feel like it's had a really nice run up. And again, this is one I've been watching for a little while. It's hard to picture it.
Also, I was going to say, Jamie, you can see also the rally. If you look at where, to the left, the rally was really, really quick over a short period of time. So if you applied volume to that as well, there wouldn't be a lot of volume. So it would be one of those vacuum areas as well, I think. Yeah, you can see there is that sort of that danger now, breaking that 66 level. Next stop, $50 at least. So it gives that, and you've got the gaps on the chart as well. So definitely one to be wary of from a technical perspective. Obviously, fundamentally, we don't cover that. So, technically, doesn't look great.
No, you are right, and I think for me, the kind of signs for a distribution or a bit of a stage 3 type phase we've had here, you can see we've had these big red volume spikes on sell-off days. So the big institutions, the hedge funds, look to be getting out of their positions, look to be trying to offload. This week we had this big volume spike as well on the downside. And when you combine that with everything we talked about, we've got this big volume gap here from this exactly where we are now all the way down to, like you say, about 53. To me, there could be quite a short, sharp move downwards, and maybe earnings will be the catalyst for that. It looks like it's on the 30th of June, so we have got a few weeks actually. But that's the kind of thing that when you have negative price action and everything we just talked about, you've got your double tops, you've got the volume vacuum, you've had distribution days. It's all kind of painting a bigger picture of a move lower. So this will be one I'm definitely keeping a really close eye on for the next few weeks, and we'll see how that goes. But we'll check back in on all these on Monday. We'll definitely check back in on this on Monday, because I think the weekly close will be significant as to whether this move happens in the next week, 2 weeks, or there's going to have to be another, we play a bit more of a range-bound choppy game before a move lower. But I think the move lower seems pretty inevitable as things stand. But nothing's inevitable. We'll have to see what price action tells us. So we'll leave it there on the stocks today. But yeah, a lot of key levels we're at, and a lot of key weekly closes. I think we'll have to wait for the end of the day.
Excellent, thanks, Jamie. Let's move on to our gun-to-head challenge. Now, this is the part of the show where myself and Jamie will pick a live trade on air, and we'll apply a stop and a target, an entry level. All ideas are placed at market. The idea of this is to sort of prove how hard it is to be forced to make a trade idea. We monitor the performance of these. We'll update you with the performance next week when Joe's back, our Excel guru. So I don't know if you've got any ideas, Jamie. I noticed when you were chatting that the DAX was taking a bit of a slap. So
of course it was.
That's sort of like I was thinking, he's going to be unhappy when he sees the hourly candle in that. I'll actually show you that. See what's happened in the last hour.
Sickening.
So again, I know, yeah, exactly. But the one that hasn't quite gone yet, and the one I wanted to sort of dive into, the one I've been sort of bearish about for a while now, is the Nasdaq. So I am going to go with Nasdaq. Let me just get the right level, because I'm going to try and milk as much as I can out of this. Let's not get greedy, eh? I'm going to go for a 5-to-1 risk reward trade on this. Now, this to me looks like a bearish flag on a short-term chart. We know about the things happening. If we look at the weekly chart, that looks like an evening doji star formation forming, and will be confirmed by this negative candle today, as long as we don't get a big pullback after CPI. We've broken down below the 21-day moving average, so that's negative, so I'm bearish on that. It might take a little bit longer to play out than just today, but I'm going to milk as much as I can out of this, as I say. So I'm going to publish this live now. I'm selling at 12,286.5, targeting a move to 11,786.5, and my stop is 12,386.5. So a 100-point stop in Nasdaq, which isn't a bad sort of like level to sort of considering the sort of like normal average intraday moves, but it's quite tight. So yeah, quite a high risk reward. But yeah, this is my gun-to-head trade idea. Jamie, over to you.
Nice. Yeah, I like that a lot. I'm kind of going a similar route, selling indices today. So here we go. Let me just bring it up on my screen. So I'm looking at the Nikkei, actually, so the Japanese index. We've had this pretty nice move up. As you can see, we've had trend lines. We've got a couple of trend lines, actually. We've got this longer term one, a shorter term one. Both seem to have been broken. So this is an hourly chart. You can see this one tried to rally off it, broke through. The longer term one tried to hold it, looks like it's broken through, and I think there's potentially room for a bit more of a sell-off. Again, whether it happens today and finishes today, we'll have to wait and see, but I'm gonna hope it does for my trade. So let's set this up properly. I'll tell you what, we can move the stop just above the range. I think that's probably a bit more sensible. Right, so let's have a go at selling this today. Selling at current price of 20, oh my goodness, this is a big number, 27,700 and, which one is it, 53. So let's put that in, and 53, oh, 4, 3, with a take profit at Oh, what have I done there? I've done the wrong one. 27,753. There we go. That's better. With a take profit at 27,029 and a stop loss at 27,923. This gives us a 4.26R risk reward. So like you, Steve, I'm hoping for a sell-off on indices today. But yeah, let's wait and see how we do with that.
Lovely. Nice one. Okay, well, we'll dive into what's expected in the day ahead. As we've mentioned numerous times, the US Consumer Price Index, eyes will all be on that. That will determine how we finish the week. Canadian employment report, and also we've got the US University of Michigan Consumer Confidence later. Key events over the next week, US retail sales on the 15th, Federal Reserve policy decision on the 15th also, Swiss National Bank policy decision on the 16th, look out for that, and the Bank of England policy decision on the 16th. So lots of central bank action next week, all will be impacted on the markets, and yeah, look forward to a bit more volatility.
Yeah, it looks like it's coming.
Excellent. All right. Well, thanks for joining us today. I hope you've had a great week and look forward to seeing you next week. We may see Joe next week, hopefully, unless he decides to stay out in sunny Cyprus.
I wouldn't blame him, honestly, although it's quite nice today, so maybe he will come back.
Yeah, maybe. Drag him back with the typical British weather.
Yeah.
Okay, great. Have a good week and be safe today.
Thanks, everyone.
Cheers.